I saw you in my dreams last night, and my heart fell apart again. You say you're still with me, but I woke up, you were gone, my friend.
All right, guys. What is going on? What is good? What is good? Welcome to the live stream. Welcome to Wall Street Wednesday. Yeah. What are you guys up to, man? What are you guys up to today? Catching up on how successful people think, John. That's what I'm doing. Reading. Right? Y'all would never say something like that. Y'all would never say something like that. Would ya? Would ya? Would ya? Mm-mm-mm. I don't know. I don't know. Yeah, gee, I was looking at Dow earlier. I'll talk about it in a minute and kind of connect. I think what I said the last two streams as far as the models in order, and I'll talk about a couple different entry models. You already know them, but I'll just cover them again. So before we get to that, chat's opened it again today. This is our last free live stream of the week, and then I'll see all the freebies on Monday. So what is good? Scott, Willow, Convicted Capitalist, Horty, Eberneth, Eric, Felix, Slowly, Marshall, Big Goon. What a name. What a name there. What's good? Johnny. JFF. How are you, man? I'm good. I'm tired and hungry. That's like a permanent thing, bro. I'm always tired and I'm always hungry. Whether I work out or not. You know what I'm saying? We'll just write it off to the game, chat. Write it off to the game. Right, Lewis? Maybe, maybe not. Tired and hungry. I should get those words tatted above my eyebrows. Tired, hungry. You think I'd look cool with some face tattoos? Maybe. Maybe, chat, maybe not. I had some images, man, and now I can't find them. I think I found them. Okay. I'll briefly cover this real quick. And I'll take any questions you guys have. What's good, Tom? Tom, we need to see you in the Discord, man. We got to get you a membership, brother. We got to get you a membership. Julius Jorks. Okay. So you might ask, well, why would I need a membership, John? You teach for free. Fair question. Fair question. Number one is permanent chat access. Number two is I don't promise this, but it is what I do in the Discord when I can. I've actually been getting up on time recently, which is great. We'll see if that continues. No promises, but the point is, I do call out levels for you in advance. Not every day, sometimes not every week, but all the time. I'm saying stuff in the Discord before it happens. So I'm not going to say signals. They're not signals or trade ideas per se, but they are biases. They are targets ahead of time. Okay. And then obviously all the member only content, the 2 market reviews every week, you know, stuff like that. So there are some things that I teach that are not on the live streams for sure. But the market reviews are also to help you save time because they're very short. They're 10 minutes on average or less. And I do that so people who have a busy schedule don't have to sit here for an hour rewatching streams all the time if they don't want to. That's a lot of work. An hour, 4 times a week. I mean, that's a lot for people to catch up on. So, how many members do we have? That is a great question. Last time I checked a couple days ago, I think it was 162 or 161, something like that. We topped out at like 216 and we're down to like 160. So, still a good amount of folks. Friday live stream, which I can't be on. Oh yeah, and the member only live streams on Fridays now too. That's another reason to be a member. Thank you for that. Clearly, I'm not the best marketer there is. You know? That's okay. Anyway, let's get back to business. So, this was posted in the Discord yesterday morning, right? And I had pointed out the lows, and I kept the highs up here as well. And obviously, you guys already know pretty much what takes place. The lows get yoinked first. That is also what I had said in the Discord as well. Was good, Shane. Was good, DJ. New member coming. Yeah, we need some more members, man. We need some new memberships. Right? So you guys can get more funded accounts, more withdrawals, more payouts, all that stuff. Sorry. You know, I can't promise that stuff, but based on the history, that is likely to continue. So, yes, called out the lows first. That we did get. And I think I covered this a lot yesterday. And I think I talked about this as well to an extent. You guys remember this? That's right. That's right. I had said you can have market maker models inside of market maker models. So a small time frame terminus might just be you know, like a scalping opportunity, but the overall picture, you can still have a much larger buy model. So this can still be that original consolidation. This can still be that upside target. And so the terminus for that small time frame, that small market maker model, you know, that just leads to a retracement, which is the low risk buy of the larger model. Right? So what inevitably takes place? Bang! Chat, look at that. Algorithm still works. We're double checking, right? We're like Santa Claus. We're looking at our list. We're checking it twice. Turns out you still don't need indicators. The algorithm still works, baby. Order pairing. Order pairing. See that? Man, this stuff is just too good. Look at that. So you see how this works, chat? It goes in order. Okay? It's like the DMV. You walk in, you grab a number, the numbers are out of order for some strange reason, but the person in front of you is going to go first, and then you're going to go after that, right? The models are the same way, okay? How do we trust this stuff? Because it's repetition. You see it, maybe not every day, but at least every week. Every week, this stuff pans out, okay? So what's the order? Every time. Original consolidation. Now, this may look weird to you because we're in electronic hours. We got a little bit more information here. But if we go to regular, right? Like your mom. Sorry, I couldn't help myself. If we go to regular trading hours, we have a much cleaner and well-defined original consolidation. You see that? It's a square. Like some of my haters, they're a square, right? This is a square. This is a box. Like uncooked pasta, baby. Right? See that? And then I was debating whether I was going to tell you this or not ahead of time, but I didn't. I'm not going to tell you everything in advance. But what I will tell you is, we talked about this before. When you look at a price leg, okay? When you look at a price leg, you have to look at the details, right? You have to look at it and go, is there anything in there? Is there anything in there? In this case, if price is going to go higher, we would ask ourselves, is there anything within that that would send price lower? Is there an imbalance that might send price lower? Is there some highs and then an imbalance above that? That could potentially send price lower. Is there something in there that would send it lower? And if you don't have that, okay, if there is nothing that is going to stop price, meaning like if there was an imbalance, that would send price lower, okay, if there is nothing stopping it, then it's going to run for that expeditiously. It's going to be the easiest thing. Okay, like some of my X, it's just very easy, no difficult time whatsoever. It's just going to blast there. Okay, that's what the algorithm does. All right, when it reprices. So, although I think traders today may have wanted a chance, let's say to open a little bit lower, retrace lower, and then long to go higher, right? That would have been cool. But the market doesn't always offer that. Doesn't always do that. But you know what it does is it speed runs pools of liquidity. You see how much of in a hurry price is to get there? Right, G. They're like a magnet. When it gets close, it's going to be like a magnet that pulls together. Exactly. I'm glad some of you guys pay attention. Okay. Back to what I was saying before I got sidetracked. This is always in order. It's always original consolidation, distribution. Let's go to electronic. We got a little bit more information here. Distribution, it's not like the image exactly, but we do get a level of redistribution to go lower, right? So once we get our manipulation, how do we know that's manipulation, chat? I walked you through that yesterday. How do we know that once this occurs or is occurring, how do we know, like, yeah, this is the manipulation phase? How do we know that? What else can we look at? Oh, Tom doesn't understand well? I don't know what to tell you. I don't know what to tell you. I speak English, rather some form of English. It ain't the best, but I try. And I agree, Penchies. I don't know if I said that right, but anyway, my haters aren't here today. They're probably at work. They're probably praying to their, or praying that their boss, approves their vacation time. I don't have time for that. But yes, the divergence, chat. Yes, we look at other assets. With ES, you can't look at Dow, but I think NQ is better, or Nasdaq 100 would be better to look at than Dow. So if you remember from yesterday, NQ did not do that. So when one of them does it and the other does, Let me say that again. I'm tired. When one of them runs the low or runs below the low, right? It sweeps that low, and the other one does not. It stays higher. That's how you know that's manipulation, which is beautiful. Right? So you don't get upset that price runs without you. Oh man, it took those highs and now I'm done. Yeah, you might be done. That doesn't mean, bro, that's only 8:45 and 8 and 9 o'clock. That's only been the first 30 minutes. There's still hours and hours left in the day. What are you talking about? The stock exchange, right? The market doesn't close, and they're gonna, ring the opening bell at 8:30 and be like, well, you know what? 8:45, we're gonna close the market because our TP hit. No. You still got the rest of the AM session, you still got lunch, you still got the PM session, you still got the final hour, and all of the macros in there. You still have a ton of opportunity for the rest of the day still. So that's why, I told you, it's manipulation. That's what sets the low. Now we are in a buy program. Okay? We don't want to chase that going higher. We want to long on the way lower. And so that becomes the low risk buy. Then we launch, and price was unwilling to trade back into a discount and instead went for the highs. Right? You remember yesterday? I snuck this in there. But you remember yesterday? I was like, how do I know when to hold trades, John? And I told you yesterday, I'm like, I literally just told you when to hold trades. And oh, what happens today? What happens overnight? How do I swing trade, John? I have a job. How do I, hold trades longer? Come to the live streams and pay attention to what I'm telling you. You could have longed yesterday and held for today. That's over 100, well, roughly 100 points. Swing trade. Even the hourly, okay? If you want to swing trade, you can stay on an hourly time frame. I would frame my entries, if it were me, I would frame the entries around the open of the hours. You're telling me that you go to work. You're telling me you go to work and you don't check your phone at least once an hour? Let's be honest, chat. Let's be honest. You're telling me you go to work, you have a job, and you don't check your phone at a minimum of once an hour? You're a liar. You're a liar. Everybody checks their phone all the time. So just sit on a 1 hour time frame. Check the clock every, ever so often. And when you realize, hey, you know what? It's 8:45, it's 8:50. Guess what? 9 o'clock's coming up. How did 8 o'clock close? Well, it was a pretty wild candle, I tell you. I mean, we went lower first and then rallied all the way up here and then came back down to close. That's pretty wild for sure. But then what happens to 9 o'clock? You remember all that stuff I taught you the other day? And over the years, basically. I lost it again, chat. You remember this? You remember this? Look how easy that is. Look how easy that is. Open. Just make sure you can see that. Open, low, high, close. I told you this can be any candle. This can be any candle you want it to be. It could be a 15-minute, it could be a 5-minute, it could be a 1 minute, it could be a session. It could be the AM session, it could be the lunch session, it could be the whole PM session. Right? It could be the final hour. Or in this case, it could be the hourly time frame. So if you see manipulation, what should take place after that? Expansion. Right, we should see expansion higher, right? If we are going to go higher, then guess what? We go lower first. So that's what you expect. That's what you expect. You go, okay, it's about to be 9 o'clock. 9 o'clock hits. You long at the open if you'd like. It is going to trade below its open. But again, if you're at work and, you just go to the bathroom, dude. I mean, if you're already logged in or something, or, you've got the app and all that, just go take a piss, bro. I don't know. What is your boss going to tell you? You can't go to the bathroom? No. So just go in there, use the bathroom, and just long it. Stop at the low. Aim for the highs. Right? Longing at the open. Okay. Again, you're anticipating drawdown because you don't have the time to sit there and try to find better entries and all that stuff. Okay. If your stop is at that low, aiming for those highs right there is a 1 to 2. That's not terrible. That's not terrible. It's not the greatest, but it ain't terrible. And of course, if you had a little bit longer, obviously, it's almost at a 1 to 3 right now. But again, that's anticipating drawdown. That's having a wide stop, and that's still having a reward that is 2 to 3 times larger than your risk. And there's no 1-minute entries. There's no models or anything. It's a time-based entry. There's still a lot of people that don't use that. Well, you wonder why you get stopped out at the low, or you wonder why the market stops you out because you had a really, really small stop loss because you thought you were Superman or whatever. You're trying to impress social media or something. And you got stopped out, but then you see the market still go your direction. You need to stop trying to have the world's smallest stop loss. You need to stop thinking that it's all about concepts. Concepts are great, but that's only a portion of it. That's only a portion of trading. You still need risk management, definitely. You still need courage, discipline, stillness. I'll talk about that in a minute too. But you can always go back into your charts. You can do this every day. You can do this every 60 minutes, actually. Because every hour does the same thing. It's either going to go open, low, high, close, or open, high, low, close. Very rarely you'll have like a doji or something that'll open and then close where it opened. Okay. But with the exception of that, when you're in a market that is set to expand, meaning you're anticipating expansion higher, meaning you are on the buy side of the curve of a market maker buy model, meaning you saw manipulation, now we have equal highs that it wants to run for, we expect higher pricing, we expect expansion on the upside, we expect that we are not going to get straight up candles. Okay, we do not expect, and this is what I said yesterday in the Discord, right? Because one of you asked me about these highs. I'm like, yeah, we probably could get there, but I don't think it's going to be today. I don't think we're going to just run straight there. And guess what? We didn't run straight there, did we? No. Price fluctuates. The low risk buy is below the open of 9 a.m. to go higher. 10 a.m. opens, it does trade higher. It goes back below the open of the hour, and then we see expansion again. Now, by this time, this is like lunch in here. The market's already rallied like 70 points. So be very careful about longing after like a 70-point move. Okay? But you can do this. Again, you can go look at every day. You can go back and look at every single day. And you can do this. There's 8. There's 9. There's 10. There's 11. There's 12, and this is pretty much where we're at the moment, right? So what took place today, for example? 8 a.m. I would not look at 8 to 9 specifically because equities open is at 8:30, so 8 to 9 might be a little bit weird. But 9 o'clock, 10 o'clock, those are good. Those are good. So equity, and again, today we opened higher and then saw the expansion for those equal highs already. So on a day like this, it would be more difficult to long, but just for studying purposes, right? You can see what 9 o'clock did. We did go lower. We actually traded right back down to the equal highs pricing. Okay. And then look at 10 o'clock. 10 o'clock opens, trades higher. And then what does it do here? Okay. You want to see time, price, and context in action. Okay. There's 10 o'clock. You draw out the open of the hour. 10 o'clock opens. We get an initial rally, yes. And then we trade down and into mitigation right here. Okay. Lower low there. The low, high, lower low, higher high sets that up to be a mitigation. Below the open of the hour. In a market, again, that we anticipate expansion. You see how that works? Drop a 1 in the chat if you guys see this. I mean, it really should not be that difficult. It really shouldn't be. Every hour isn't going to be an up candle to go for the highs. It's not going to do that. Very rarely do you see that. Sometimes, yeah, sure, but that's not a normal price delivery phenomenon. Okay? So this is why higher time frames are solid. This is why we use time, price, and context, not just price. That's where a lot of people get lost. Listen, I know all this shit because I did it too. I know what younger traders think. If I just knew more technical analysis. Wrong. Wrong. Knowing more technical analysis is a part of it, yes. Knowing smart money concepts is a wonderful thing. But it wouldn't be great if you took away price, if you took away time, if I had, no ability to see what time it was, and all I had was like one time frame chart, that would make things far more difficult. That would make things far more difficult. But when you combine price with time, that's where the magic happens. Okay? That's where the magic happens. Not just looking at the candles on one particular time frame. The map is not the territory. That's a mental model. Drop a map, drop MAP, map in the chat if you guys know that mental model. The map is not the territory. Remember what I posted. I'll show you one more time, just to prove my point. You remember this? We just went over this a few minutes ago, and I posted this yesterday, right? And what did I quite literally post? A daily on the left, and this probably could have been this would have been better if I did like an hourly, but I wasn't really too worried about that. But I'm showing you multi time frame here, multi time frame, and as a reminder that these lows here, they look good. But that dubs as previous day's low as well. That's good information. The highs up here don't really look all that great on the daily time frame, but they do look good on a 15-minute. So it's piecing together multiple time frames. And then if you're going to be, an intraday trader or day trader, then the smaller time frames, the 1 minute, the 5 minute, then that stuff matters. A lot more. But you go down in time frame. Okay? The weekends, Saturday, Sunday especially, are really, really good for higher time frame analysis, because the markets aren't moving. You're not going to be worried about taking a trade. You're not going to be worried because there's nothing to do. So you can relax, check the weekly and daily, and start mapping out things that you see. All right? So, like, I'll give you an example. Well, maybe not. I'm giving you a hypothetical example. Friday, and then Sunday opens to trade lower. You could probably see those highs here and think, well, that might be a target. So Monday does trade higher, but it doesn't take these highs here and just rolls lower instead. So once that occurs, Monday morning, Monday afternoon, you can go, oh, okay, well, that the smaller time frame wasn't taken, but now those are very close together. Now we've got some clean highs that are going to be ran out later on. Is it going to be ran out today? No. The market needs time to deliver. It needs time to generate liquidity. Yeah, what you aim at is what you see. Thank you, Jordan. Jordan Peterson. We trade lower, then we leave those lows, and then we trade back into the range. So now, and again, this was all posted for you ahead of time. This is not hindsight. I literally finessed this for you this week. We have small time frame lows and then a higher time frame set, like a larger set of highs. So then guess what? That should set up manipulation. That should set up expansion for higher pricing. You see what I'm saying? So you already know what's going to happen in advance. That's why I do it so often. That's why it's so easy. Because it's the same things over and over and over again. Let the highs be set, generate some lows, sweep the lows, and then run for the highs over and over and over and over again. All the time. Or the inverse. Set some lows, run a high, and then you get a reversal to go sweep for the lows. See what I'm saying? Like something like this right here. Probably not the greatest, but this is like a very small version of a sell model. Consolidation. That high being taken here is manipulation. Lower is short. Imbalance, right? Distribution. There's a lot of distribution here. Distribution, redistribution, and then manipulation, right? So that's terminus. Any shorts get closed at the lows or below them. And that terminus of that sell model was the manipulation phase of the buy model. You see how that works? You see how the algorithm works, chat? It ain't me. It's the market. It's how it's delivered. It's how it's coded. Okay? Who coded it? Don't know. Don't know who to ask. Don't know who to verify. Couldn't tell you. Why do you even need that? The chart is going to show you. The chart is going to tell you. I can give you information. I give you a lot of information. I give you the fucking best information. I'm not scared to say that. I do. I give you the absolute best information. I showed you perfection yesterday. Perfection, they say, doesn't exist. I show you macros, they say that doesn't exist, but yet price levels are hitting inside those macros. Well, then those two things automatically are better than anything else you can find, because you can't improve on perfection. You cannot. So yes, I give you the best information. I don't care what you have to say about it. That's egotistical. Well, then go somewhere else. Go somewhere else. I'm not going to hold I'm not going to put a gun to your head and tell you, you got to be here. You got to stay here. I don't care. You know what I'm saying? I'm here giving you this stuff for free. Okay? And this is how the stuff works. No indicators still. Still. You said buy that person a beer, maybe? I don't know. I don't think I would trust anybody that said that. They're like, yeah, I'm the one that coded the algorithm. I don't know. But again, I don't think you need all that stuff. You don't need that. You don't need that. You need to see what works. You need to study what works. And then you need to apply what works. There's going to be some trial and error. You're going to get it wrong. You're going to mistime it. You're going to skip higher time frame analysis. You're going to see a potentially good setup. You're going to over leverage. You know you shouldn't do it, but you do it anyway. Right? And you got to learn from that stuff. So eventually you get to that point, like, okay, I'm going to manage my risk. I'm going to take good trades. I'm not going to have a super tight stop loss. I'm not going to have a fat ass stop loss. You know, I'm going to have some good RR trades. I'm going to place the trades with courage. I'm going to hold them with discipline. Okay? I think you meant to say heat, but thank you, G. Yes. So anyway, I think that is a good transition over into book of the month. I think that is wonderful. So that'll be the end for the technical analysis portion. If you don't like reading, if you don't want to stay, you're welcome to enjoy the rest of your day. And I'll see you guys on Monday next week. But I want to briefly talk about this before we break, or before you break for the weekend. So every month, we've been doing this year. I did it a few years ago as well. I canceled it because you guys don't read. You probably still don't. But I brought it back. And all of 2026, I have book of the month. There's 11 books because we are spending 2 months on 48 Laws of Power. So because we are at the end of February, it's February 25th. There's only a few days left. On Sunday marks March 1st, right? So because the next free stream is on the 2nd, I need to tell you about this today so you can get it. Okay, so book of the month for March of this year is going to be Stillness is the Key by Ryan Holiday. All right, Stillness is the Key by Ryan Holiday. I actually had to go get a second copy because this is my first one, but I've had it for a while and the spine broke. You know what I'm saying? I broke its back, if you will. Okay? It's like, you see that? It's broken. That is the sign of a well-read book, chat, when the book falls apart. Okay? So this one is also, I used to say this a lot when I was still in the MLM industry. Out of all the books I've ever recommended, Stillness is the Key. I think I got the most positive feedback on from this one. And I'll be doing a companion essay on the first part, which covers the mind. There's mind, spirit, and body. And I'll be covering the mind, part 1 in the essay, which will be on the 13th. Another Friday the 13th, dude. Did I go over YM? No, I didn't. I didn't do that. I guess I probably should. But before I do that, I wanted to leave this here for a minute, so just to make sure everybody sees it, everybody gets it, so I don't go too fast and you don't write it down or anything. What was that book? Stillness is the Key by Ryan Holiday. All right. Companion essay on the 13th. We'll have a discussion on the 27th. Our next discussion is this Friday on How Successful People Think by John Maxwell. Way of the Warrior said I read it. Did you take notes on it? Can you tell me what it's about? Tell me what it's about. Matter of fact, Warrior, tell me what it's about. Tell me what you learned. Tell me 5 things you learned from that book. Go. No time. Type. Type in the chat. Tell me now. Tell me now. What'd you learn? Or you're fired. Okay. I did say I'd do, I'd say I'd go over Dow, so I guess we'll go over that real quick. Yeah, we can do that real quick. He said, "Can't. I'm playing video games." Yeah, you're fired. Enjoy your time off, buddy. This is also a very crappy version of a buy model. You do see the C8 logo here, by the way. But this is kind of a buy model here. When I tell you the order of models, okay? The order of models is because of the order of the stages of a market maker buy model or a sell model. So let's do this real quick. Okay? There are multiple stages. There's like 7 stages. Okay? That's why it's easy to predict price. Never react. Never react. You can predict. Well, some people can't, but I'm telling you, you can. If you do it right, if you pay attention to what I'm telling you, you can predict price. Okay? So there's a protocol for shorting right after equal highs. Yes, there is. I don't do it often, but there is a protocol for that. You can short redistribution to go for a higher time frame low or a set of lows, like yesterday on ES. Okay? So manipulation, that's where you're going to have like your turtle soup. Right after that, okay, meaning like immediately after that, that's where you're going to start seeing what? The Judas model, that's like a 1, 2, 3 formation low. The Judas model with an inversion. If you don't get that, there's going to be some sort of inversion. There's going to be an imbalance, most likely. Okay, if not on the 1 minute, you may go to the 2 minute or the 5 minute. You might have to look at time frames. Okay. The very last one, once we get through that, usually it closes better. Ooh, excuse me. Usually it closes better. That's where you're going to have, okay. Now, mind you, I told you this already. I tell you this all the time, right? But again, prove me wrong. Prove that what I teach you is bullshit. Okay? I dare you to try. I dare you. Seriously, I dare you. But look at this. 935, right? We trade lower. Personally, I thought we were going to go down here. Okay? Seriously, in all honesty, I thought we were going to come down for these lows. I was watching that. Definitely was not trading it, but I was watching it. Okay, so that, I was like, okay, that's crazy to me that we didn't get it. But nonetheless, price doesn't always bend the knee to me. Okay, well, it never really does. But I try to get it right, but I don't always get it right. So what happens instead is we don't trade for the lows. We end up leaving a small portion of our regular trading hours gap open. And then so inevitably what happens? We do have an imbalance here. We do have up candles here, bunch of lows, right? So the low, high, lower low formation, higher high, that sets up the mitigation. So you have a mitigation here. You have an imbalance here. So you have the mitigation model or the imbalance model. This is an inversion. That's the inversion model. That's 3 different models right there. Then you have higher pricing. We trade lower. We get a nasty series of down candles. That gets traded through. And then what happens right there at 1026? Look at that. Don't trust me. Don't trust me. Look at the chart. Tiago, welcome. Look at the chart. What takes place? Open, low, bang, right into that series of down candles. That's crazy. Right? That gap higher, there's a gap higher. Well, it's Dow Jones. There's going to be gaps like all over the place. The Dow 1 minute is arguably, you probably have a higher chance of getting cancer watching the Dow on the 1 minute, honestly. Like somebody needs to definitely do a scientific study on that. But either way, that ends up becoming a suspension block, which is cool. But nonetheless, shift and stay delivery, bang. And then where do we go? Higher. For what? These highs. Well, equities open highs here. That's a pre-market high. The equities open highs sets us up for the low resistant highs. Those don't get taken here. We do retrace, right? We never get down into anything there, and then we run for those highs. So that's what I'm saying. It's in order. Manipulation always, always, always sets the low. Always sets the low. Unless it's a divergence. That's the only exception. Like NQ yesterday. That's the only exception to that. In any other case, because a divergence has to take place in order to understand manipulation. Okay? So there has to be that exception. But one of them will make a lower low in a buy model. One of them will. It has to. Okay? There's no exception to that. None whatsoever. This is how it works. Okay? Manipulation always sets the low. And I told you what happens after that. What happens after that? Oh, I got rid of the visual again. What, huh? What did I tell you in 2024 and prior to that? But I don't know if I have screenshots prior to 2024. But in July of 2024, what did I tell you? We would have low risk longs and the first leg accumulation right after manipulation. At manipulation and right after it, you're going to have low risk longs. Low risk longs. So what are you going to have? Mitigation model, imbalance model, inversion model. You really don't have like a Judas here, like a 1, 2, 3 formation. You don't really have that here. Okay. We trade higher, back into a discount, then we leave it. And that is a continuation entry. That is an add-on or a later entry. Because why? We're in a buy program. The other indices are bullish. Dow is usually dog shit anyway, but it's going to catch up. The other indices are flying. Dow went lower at our open today. Right here. So guess what? This is all below the open. Even that. Manipulation. Next candle entry. Inversion. Mitigation. Imbalance. I already counted the inversion. I'm not going to do that again. We trade higher. Back into a discount. There's probably something there on another time frame, but I'm not going to discuss it. We hit 50% of the regular trading hours gap. Okay, that's weird. That's strange, isn't it? That's at least 5 entries. Continuation entry, that's 6. Suspension block, that's 7. That's at least 7 trades right there. At least 7. I only have 1 model. There's 7 opportunities right there. And you're telling me you're going to limit yourself to only 1 model? You're an idiot. You're an idiot. Now, if you're a beginner, that's okay. That's cool. If you're a beginner, you've been trading like a year or less, okay. Yeah, maybe stick to 1 model, sure. You've been doing this a while, and you're only going to take 1 type of entry, you are limiting yourself. And I'm telling you, you're wondering why you're not getting the results that you want. You're placing limitations on yourself. There's 7 opportunities to go long here, at least. And that's if you don't count the halfway point. Or anything on a different time frame. Right? That down candle right there. That could be one. That's 8. Those 2 down candles here. There's another one. There's another one. Right? I should be John Khaled, right? Just repeat myself all the time. Another one. Another one. Another one. Look at that. How many opportunities you need? Market maker, buy model. The models always occur in order. All right. So with that, we'll close it. Okay. So y'all be good. Have a good weekend. For the free members, have a good weekend. I'll see you on Monday. Go purchase the book. Don't download it. Don't pirate it. You're better than that. Okay, we're grown adults now. We don't need to pirate anymore. Okay, go buy it. It's like 10, 12 bucks on Amazon. Okay, I won't even give you my link. Okay, just go get it. Or go pick it up off the shelf and wipe the dust off if you have it already, because I've been recommending it for years. But we're going to get into this one next. All right. Yeah, I feel like we covered a lot of stuff in the last hour. So the members here, I'll put out a market view tomorrow on Thursday. And then we'll have our discussion on Friday of How Successful People Think by John C. Maxwell, the GOAT, the absolute GOAT of leadership.